Very good evening. You're watching NewsX and I'm Shivani Singh. The Economic Survey 2025-26 was tabled today by Finance Minister Nirmala Sitharaman, and it paints an optimistic picture of India's economy despite global headwinds. It reaffirms India as the fastest growing major economy. First advance estimates project 7.4% real GDP growth and 7.3% GVA for the FY26. Medium-term potential is around 7%, while FY27 growth is seen at 6.8 to 7.2%. A steady momentum with caution, not pessimism. Inflation is at historic lows. Headline CPI averaged at just 1.7% in April-December 2025. Private consumption has hit 61.5% of the GDP, a decade high, while investment grew 7.8%. Banking sector also strengthened with GNPAs at a multi-decadal low of 2.2%. Exports touched record highs. Overall, strong macro stability, low inflation and reform momentum position India for sustained high growth ahead of the Union budget. With that, let's in fact take a look at the top 10 takeaways from this year's economic survey. So, this survey that was in fact tabled by our Finance Minister Nirmala Sitharaman paints a very positive picture of growth for India going forward. So, let's look at the top 10 key takeaways from this economic survey. There is a strong GDP growth momentum. So, that's point number one. Real GDP growth for FY27 is projected at 7.4%. with GVA growth at 7.3%. That's a strong number that we have over here, 7.4%, and India's economy remains the fastest growing major economy for the fourth consecutive year. So, this has also been supported by international organizations. We know through our numbers that India is one of the fastest growing economies, and number 4 over here for the fourth consecutive year. So, this is something that actually our numbers prove our worth. There is a strong GDP growth momentum in India. Let's look at point number 2. Domestic demand is the key driver over here. So, domestic demand actually forms one of the key drivers. Private final consumption expenditure has risen to about 61.5% of the GDP. So, 61.5% of the GDP is coming from private final consumption. That's a good number for our economy. It's the key driver, and investment and private consumption continue to power growth with broad-based gains across sectors. So, this is the sector, this is something that is actually powering India's growth of GDP. Let's look at point number 3, the macroeconomic stability and fiscal prudence. The prudent fiscal management has boosted credibility and confidence, and gross NPAs in banks or non-performing assets in banks have reached a multi-decadal low of 2.2% in September 2025, reflecting a healthier banking sector. So, these NPAs are non-performing assets. The greater you have a weaker banking sector. But over here, this survey points that it's to a decadal low of 2.2%. So, it's a symbol of a healthier banking sector. Let's look at point number 4, inflation and global context. Low inflation supports consumption momentum. Survey emphasizes domestic strengths and calls for caution, not pessimism. India's growth stands out positively compared to other major economies. So, as compared to other economies in this geopolitically divided world, India is growing forward. Let's look at point number 5, reforms and structural strengths. There is a push for deregulation, for labor code implementation, for logistic reforms and efficiency gains to push potential GDP higher. So, these are the things that the survey actually points out to in order to make sure that our GDP is higher the next time. So, they are looking at labor codes implementation, they are looking at reforms in logistics and other things to make sure that our GDP is higher. Let us look at another key takeaway, which is again reforms and structural strengths, opportunities in global supply chain rerouting with suggestions like FTAs to boost manufacturing competitiveness, and emphasizing on Swadeshi as a legitimate tool when trade isn't reciprocal. So, one of the things that the survey has pointed out to, in order to boost our GDP growth, we need to look at FTAs to make sure there is competitiveness in the market, and also they need to make sure that there is a Swadeshi movement to make sure if there is no reciprocal going on right now between in the trade, then you need to go Swadeshi. So, that is what the survey in fact has pointed out. Let me in fact open up this discussion. This is the economic survey that has been tabled by the finance minister. Joining us on the broadcast is Mitali Nikore, economist, Gautam Mukherjee, senior journalist, and Professor Aman Agarwal, director, Indian Institute of Finance. Let me in fact first go across to Mitali Nikore. First of all, everyone, thank you so much for joining us to discuss this. Mitali, when we are looking at a very strong picture, macro economic picture is very strong for India. The growth rate might have reduced a little because earlier we were looking at a growth of 7.4. Now it's in the bracket of 6.8 to 7.2. How are you looking at, what's your first reaction to this economic survey?
No, absolutely. Thanks a lot for bringing me into the conversation. So I think when we look at the economic survey, that the government recognizes that at this point, the most important thing for India's economic sustainability is India's economic security. And what do I mean by economic security? I mean, we've been covering this entire saga of Trump tariffs and the geopolitical tensions that are underway. But the economic survey goes beyond that. Of course, it speaks about the geopolitical tensions and the fact that they have tempered global growth. But beyond that, it also speaks about the fact that there is an AI bubble, and that AI bubble could actually impact growth globally. It speaks about the fact that there is actually instability even in global financial markets. It acknowledges that the rupee has also underperformed. So while it gives this headline growth number, and it makes sure that we understand that the fact that we have been able to diversify our export markets, which is something that is counted as a very big positive, and that we have actually been able to do very well on social protection, on expanding some of the social sectors, there are still areas which are holding us back. And the economic survey is very bold in actually pointing out those areas. For example, urbanization and the need to create cities that are centers for growth. So I think overall a very balanced survey.
Absolutely, Mitali. In fact, we'll go through all those details that you have mentioned, the AI bubble, the rupee devaluation. But let me also rope in Professor Aman Agarwal into this discussion. Sir, how are you looking at this economic survey? What are your first impressions of this?
No, I think the economic survey has brought out a very good picture of the way the Indian economy has performed in the last particular year, 1 year. The last quarter is still yet to be evaluated, so you have budget estimates which are actually present. But given the fact that the performances, whether it is GDP numbers or inflation or foreign exchange reserves being created or other macroeconomic indicators, last 2 quarters have seen a tremendous jump, whether even in case of fiscal prudence or GST collections or direct tax collections and all these things have been fairly bullish and positive, both in the economic survey and last 2 quarters in particular. Yes, we do see that the GDP growth, as you pointed out, is expected to be a little less for 26-27, as against what was expected before. But I think that would be surpassed even now. With this particular year, we may see a better GDP growth rate because the quarter four is still yet to come out, and yet the numbers are yet to be there. One good part of this particular economic survey has been on data is that despite the kind of uncertainties which have been happening around the world, specifically when we talk of a specific country like United States, which have been one of the largest trading partners with India, has had a lot of economic impacts globally, has a large number of wars happening. We also had our own India-Pakistan trough during this period. Despite all that functionality, the problems which we faced, the economy has been growing at a rebounding phase. The unemployment numbers have come down. Yes, the poverty numbers have gone up because of the definition change, but that is quite subjective because our rupee has also fallen, and that does create that problem of the coverage which is there. Now, in my opinion, the economic survey is giving a very good headstand for the budget going forward and the capex expenditure to be increased substantially by the government of India. They have a huge kitty at their disposal for actually going forward for developmental schemes, schemes which will benefit the people, not as distribution of goods and services only, but more in the form of investing in the future. I think the recent FTAs also, the one which concluded a day or two before, and a couple of others have clearly embarked the fact that this government is focusing at a developmental chart for the country and for the people at large than just a foray of schemes or structures which will look bubbling up but not giving real growth. The growth which we are seeing, given the overall balanced growth in the different segments and sectors, clearly shows an equitable growth for the economy in the economic survey.
Absolutely, sir. In fact, some very pertinent points raised by you over there regarding the FTAs as well, that has been in fact mentioned in the survey. Before I go across to Gautam Mukherjee, let me introduce this piece of information to our viewers that the Chief Economic Advisor, VA Anantha Nageshwaran, in his briefing on the economic survey 2025-26 has said that Swadeshi is a legitimate policy instrument when trade is no longer reciprocal and the market is no longer neutral. He said that India has the potential to reach a 7.5% growth rate on account of improved manufacturing and land reforms. So, Gautam Mukherjee, I would like to get your reaction to this because do you see our, the movement of Swadeshi, which is obviously still gaining momentum in our country, but do you see this as a pivot which is back to protectionism because we are trying to protect our, resources, our economy, or do you see this as a very strategic way out of marking the end of globalization?
Well, I think Swadeshi in this context means it's a kind of an import substitution. Now, if you look at the amount of money we have been spending in the past on defense acquisitions from abroad, and the trend now gaining ground to make as much as possible either completely in India or in collaboration with foreign entities, so that more and more of the defense purchases are either Indian or have large Indian content, 50, 60, 70% Indian content. I thought the economic survey basically spoke of a robust, resurgent domestic economy. What we are not yet getting the fruits of. We have signed 8 different FTAs. Many of them haven't started functioning as yet because of various reasons, and they all augur well for increases in exports. Leaving Trump's tariffs aside, that's one country, very large, and we can say one country, particularly because we've signed the EU trade deal, which is an almost of equivalent size to the United States. Now, when all of these FTAs kick in, our exports will go up quite a bit. Not only that, because of the interaction, there'll be further collaborations. We will become part of the global value chain to a greater extent. And I'm not ruling out the US FTA coming through also shortly. Now, if we're at 7%, 7.5% already based on domestic parameters, we have quite a possibility of raising this by a point or two, perhaps 3, in terms of increased exports. Now, the two things we spend a lot of money on bringing it in import-wise is oil at nearly 90% of our requirements, and armaments. After all is said and done, we still buy and need to buy a lot of armaments. Now, if we were to spend, I hope in the budget, quite a lot to develop the new oil finds, particularly in the Andaman region, we could perhaps, more effectively than anything else, substitute the imports with oil that is Indian and can contribute. Now, the Bombay High and so on has been dwarfed by our actual consumption. So these are the two things that weaken our rupee, alongside the fact that our exports are none too hot. They have grown considerably from negligible to something, but we have a long way to go. So exports growth via the FTA, oil generation from the Andaman find, and more defense manufacturing so that we don't have to pay for it in hard currency abroad. Now, if these things happen, I'm sure we can go higher than the 7.5.
Absolutely, sir. In fact, a robust domestic economy, that's what's the highlight right now. In fact, the economic survey further has stated that the value of the rupee, which has slipped to 92 per dollar mark, does not accurately reflect India's stellar economic fundamentals. In other words, the rupee therefore is punching below its weight. The survey has in fact said this. It also said that investor reluctance to commit funds to India's warrants examination at a time when inflation is under control and the growth outlook is favorable. So, India depends on foreign capital flows to maintain a healthy balance of payments. Let me in fact get in Mithali on this. Mithali, the rupee is obviously seeing a weakened sign. You also mentioned that it is weak as compared to the dollar. Why do you think is this happening? Do you think this is a paradox that has been highlighted? Because all our macroeconomic numbers are great. We are doing fantastic on the macro scale. But what is happening is we are not getting the global rewards in turn. Why is that happening, Mithali?
No, absolutely. So I think the first thing we have to understand about this entire macroeconomic picture is why is it that we are seeing these extreme fluctuations in the global exchange markets, right? Exchange rate markets. This is not a reflection, as the chief economic advisor has very rightly said, this is not a reflection of the strength of the Indian economy. It is rather a reflection of geopolitical.
Mithali, if I can, I apologize for interrupting you, but there seems to be some network issue. We cannot hear you clearly. Let me rope in Professor Aman Agarwal on this. Sir, when we're looking at the rupee, it's underperforming, it's punching below its weight. Why do you think is that happening?
You see, I agree with you. I think it's very well pointed out by the Chief Economic Advisor as well. RBI technically, since our independence, has been of an opinion of keeping the rupee low on the behest and the request of the exporters and the exporters lobby, which has been wanting the rupee to be low. However, during Atal Bihari Vajpayee's time also, we saw an appreciation from roughly about 42 rupees to about 29, 28, 29 rupees a dollar at that time, way back in the early 2000s. And we saw that the exports also, the net exports have gone up. So this particular trade policy framework which has been there, which has been pushing the rupee down, and the RBI not taking it up so strongly, has been one of the critical factors of letting the rupee be low. However, it counters the growth and productivity of the nation, because we conducted at the institute a study almost about 15-20 years back. 1 rupee fall at that time, that means 1 rupee fall against a dollar, meant sending India back by 10 years. That was the kind of an impact, because you see, your productivity to buy goods and services, like Gautam just mentioned about defense, which is inevitable, oil, which is inevitable, which is an inelastic. All our exports are all elastic in nature. So the fluctuation in the pricing makes the exports a little expensive, and people are sensitive to those kind of products. But when it comes to imports, all of them are inelastic in nature. And as a result, the devaluation of a rupee becomes a big cost to the nation. I, as a professor, if it is a rupee which is stronger, if you look at purchasing power, whether it's a cost of hair cutting or services or people working for us, if you really look at that if only comparing US in particular, the range is around 5 to about 12 rupees a dollar. Whereas when you look at everything else taken into a basket, we are around 92. So imagine if I want to buy a laptop, if it was 10 rupees a dollar, a laptop which is costing about 10,000 rupees, imagine $1,000, that would be about 10,000 rupees, as against 90,000 rupees. How many people can actually increase their productivity by just one particular instrument? Similar is the question of books, research material, data, information, and a lot of other things. So I think the government policy framework is looking at that framework. RBI, when Shaktikant was there, did understand this and kept it at constant favor, and you could see for a long time it was constant when he was as the governor of RBI. But generally, both the ministry people, when they land up as the governor of a central bank like RBI, we have seen that they have always had the tune of listening to the traders community and letting the rupee be weakened. And that is not, in my opinion, a good factor. But then, this is a market-driven system. Even the RBI cannot influence it. It is not like raising the water level by pouring some little bit of water on the land which will make it go up. It doesn't happen that way. You have to have structured strategic policies and framework in place and a mindset to go forward with it. And I think the government and the RBI is doing well. The government is performing well. This particular survey report is not a performance of RBI. This is the performance of the policy framework, the structures, the models, the structures adopted by a government of India in tune with all the agencies prevailing in the country. And I think that has shown a very good bullish step. As I said, last 2 quarters were very good. This quarter, I am hopefully seeing it to be good, and we will surpass the 7.5, as Gautam also said, the economic advisor said. If we really look at the potential of this country, and as people said, despite formalization of demonetization and everything happening, still our parallel economy is as strong as a normal economy. And as a result, anywhere around 7.5% growth effectively means about 12% growth in our real terms. So we are actually growing faster than any other economy in the world. And that is something which is attracting EU and other nations to come and partner with us in terms of growth and bringing prosperity for their own nations as well.
Absolutely. In fact, apart from this, there was also this point of, fiscal consolidation. The states, in fact, need to follow fiscal discipline to keep the sovereign borrowing costs affordable. And the CEA had said, while speaking about the economic survey's inputs on the government's well-being on track to meet the fiscal deficit target of 4.4% of the GDP. This is estimated for the current financial year based on broad trends. So, Mithali, when if I can come to you on this, when we are looking at the fiscal consolidation, we are on target. The entire country it might meet that target of 4.4% of meeting that deficit target, but there is a question of the states not following because they have pointed out something called as the state level fiscal populism. Do you think that the states can be a very big threat to our sovereign credit rating?
So I think this is a very interesting question and a very key question, because today if we look at the way the states are actually spending and the way they are diverting their finances, a lot of states, and as you know, RBI actually did this state of state survey. It does it every year. They find that almost 1.7 lakh crore of funds across states are going towards direct benefit transfer and cash transfer schemes. But beyond just cash transfer schemes, it is also going towards freebies. Now, the RBI has also provided us with a framework to distinguish between cash transfer schemes and freebies. So cash transfer support is meant to be a targeted social protection measure for the most vulnerable sections of the population, like women. But on the other hand, a freebie can be when you're giving away a public transport, for example, or a public service for free without actually charging for that service, and the state incurring a massive cost in delivering that service. So this distinction is to be followed very closely by the states, and states have been discouraged from giving away freebies. This is where we have a risk that when elections come in and states feel that to get votes they should give away freebies, that's when we start to see the fiscal prudence and the fiscal discipline get disrupted. What is critical now is to educate the states, particularly the states where there is a history of social protection but without freebies, and that is something which we need to strengthen. We need to reduce the cost of social protection. See, nobody is saying that the poor and marginalized groups of this country should not be supported. In fact, that's the primary aim of government expenditure, to support that category of 5% which are extremely poor, as well as the 24% that the economic survey has pointed out are those who are in middle level poverty. So these groups, almost
Right.
30% of India's population, need that support, but it has to be done in a manner which is fiscally prudent and efficient.
Absolutely. In fact, apart from this, the CEA has, before speaking about the impact of tariffs and global uncertainties, he said, and I quote here, that personalities are not the reason why the world is looking at trade wars, military conflicts. These are products of choices that we made 15 to 18 years ago, and therefore the train has left the station. The consequences will stay with us for 5 to 10 years. We need to take it as given when we look at our own policy options and priorities. I want to rope in Gautam Mukherjee on this. Sir, you have been mentioning like the major part of our growth, our economy goes towards hardware, buying military hardware, or to oil, and these are the sectors that are facing challenges right now. We are facing a lot of challenges with the tariffs that have come in place. In fact, the CEA has also mentioned something about AI bubble. They've mentioned the digital detox that should be implemented in the country. How are you looking at all these threats or challenges that were in fact mentioned in the survey, sir?
Well, the tariffs cannot be made the panacea for all our problems, because they have been there. And ever since they're there, the surprising thing is India has diversified and managed to hold the fort at the 7.5%. There hasn't been a drastic, attack on our exports or anything of the sort. In fact, certain things have held firm even with the United States. But going back a little bit, as to the states being profligate and the center doing all the development, all the infrastructure development, all the logistics development, which are all obliquely oriented to increasing the GDP and increasing exports. We've got better ports now, we've got deep water ports, we've got container handling ports right down in Kerala, as well as a new one coming up in the Andamans. But the key thing, quite apart from welfare, which is really percentage-wise not such a big deal. It is the lack of revenue generation in certain states. Now, in the better run states, you've got a competitive feeling between, let us say, a Gujarat and a Tamil Nadu and a UP now, and states of that order who are uh, constantly improving their capacity to attract business, attract industry, and generate more revenue. So they climb the revenue stakes. They become, more and more prominent. Some of them are aiming at 1 trillion each. That's most of them, most of the better run states. Then you've got those who have destroyed their infrastructure and industry, and in fact divert whatever they get from the center to handing out freebies and maintaining their cadres, places like West Bengal. Now, when you do that, there is really, it's a bottomless pit,
Right.
and there is no way out. So the center is not the only engine of development. We talk of double engine, triple engine, but there are a whole bunch of states, particularly in the opposition, that
In fact,
use
very
the states
interesting
as milk
point
cows.
you have in fact raised, Mr. Mukherjee, because even the CEA has stated that there are 3 economic engines. He mentioned that there is agriculture, there is manufacturing, there is services. These are the 3 economic engines that have to fire together in the global environment that we are currently in. And according to the Economic Survey 2025-26, agriculture and services sector are the biggest contributors to the GDP. Let me just get in a last word from Professor Aman Agarwal on this, because you've mentioned the point of the engines. So, Professor Aman Agarwal, when we are looking at these 3 particular engines that has been mentioned by the CEA, these are 2 of them are the biggest drivers of our economy.
No, you're correct. You see, technically, we've always had 1 or 2 of them always driving the economy traditionally as well since we got our independence. But if we really look at the services sector growing up, when we had only 2 components, which is manufacturing and agriculture till almost 1990s, that was the only 2 components where GDP was looked upon. When the services sector was created, we certainly had a bubble up come up in services, which was not gradually grown because large number of segments from these 2 sectors, because they were the only 2 identified sectors under which everything was categorized, moved into the services sector. Fortunately, it grew, and then there was a structure where they thought it will grow like we have seen in Europe and the US, where services actually crosses roughly about 60 to 75% of the proportion of GDP contribution coming from the services sector in these economies. In India also, they started looking at that as a structure which may happen. I'm happy that it did not happen, because there has to be a balanced approach to structures. So we have not let go of agriculture, we have not let go of manufacturing. We need improvements there. The government has worked extensively hard, although the farm law failed, but they did implement to a great extent a lot of other features and policy measures which were required for agriculture, which houses the largest population in this country. Roughly about, in my understanding, about 62 to 65% of population is engaged in pure agriculture. Another 10 to 12% is engaged in agro-based industries. So we are looking at about 70 to 72% or 75% of the population of this country still engaged in agriculture plus agro-based industries coined together. So that industry is still contributing and growing. All the sectors are growing fairly well. The services is contained to about 50, 51, 52%. It may go to a highest level of 55% for an economy like India. Anything above that would be killing, because then we'll be totally dependent on that segment for growth coming tomorrow, which is not important.
Right.
A balanced approach, in fact, even if it comes down to about 45% and some of the other segments grow up, will be beneficial for a country like India, because we are a human capital rich country, not only in terms of soft skills, but in terms of the other segments like agriculture and manufacturing. So
Right.
overall, this is a good framework structure for rebounding growth. Absolute numbers are growing up, percentages are growing up, both factors are growing up, and it's not that we have seen a downfall in any one of them. So from a world economic perspective, India's growth is very stable and sustainable, and that's
Right.
very critical. And that has become the way post-COVID, which was not the way before COVID, because we used to look at the West and the developed countries and see what are they achieving, and we need to achieve those as well.
Yes, but
India has been able to balance.
it's our growth story now. So I thank Mithali Nikore, Gautam Mukherjee and Professor Aman Agarwal for joining us on the broadcast with that valuable discussion. In fact, the survey says that 2026 may mark the point at which policy, credibility, predictability and administrative discipline cease to be mere virtues and instead become strategic assets in their own right with lasting relevance. Now, put differently, India must run a marathon and a sprint simultaneously, or run a marathon as if it were a sprint. The document says, adding that the appropriate stance for 2026 is therefore one of strategic sobriety rather than defensive pessimism. The external environment will require in India to prioritize both domestic growth maximization and shock absorption, with a greater emphasis on buffers, redundancy and liquidity. It said, in a world of geopolitical turbulence, the survey adds, this may not be confined to a year, but could be a more enduring feature. With that, we are wrapping up this bulletin and slipping into a short commercial.